All right, good morning, everyone. Welcome to the Hurley Investments Trade Findings and Adjustments of August 15th, 2024. What you're seeing is from August 1st when everything was falling like a rock. And we basically discussed what we were doing, adding puts to things like NVIDIA, gave you a screenshot of how much our puts were worth. Those were looking even better in the following days after. Talked about why the market was choking. Basically, everybody's now worried that we're going to be hitting recession in a meaningful way and slowing down economically too quickly. That's that soft landing you were hearing about when you listen to the Fed. So I know you guys are always listening to the Fed every time he comes on the TV. But if you want to go back and look at that, that was August 1st webinar at myhurleyinvestment.com. But now we got retail sales numbers this morning, which came in good. And we talked about bad news being good news, as people want to see the economy slowing a bit and seeing inflation come down. But like I said, there's people starting to get worried that things were slowing too quickly. Those worries have been mitigated by other positive numbers economically coming out. And as I mentioned just a second ago, this morning, retail sales numbers looking really good. So that's what we're dealing with right now. So the question is, the market's come down a bit. When is the point that you start to take advantage of things bouncing back up? Well, you could have taken a little more risk like I did and decided, hey, the news is looking a little better. People are looking like, or at least the market is looking like it's been oversold, overreacted, and starting to realize that. Why not get some dollar cost averaging happening on your shares? Why not maybe add some calls as things come back up? But today, what we're looking at is, yes, it's one day, but also a trend starting in the positive direction, where we are now over moving averages and resistance levels, where you even have a safer bet to be adding a bullish trade. So what would a bullish trade look like? So we'll get to that. Micron and NVIDIA, we added shares to and got dollar cost average to take advantage of this sell-off. It was always overblown with regard to Nvidia and Micron, but when fear goes up, the first ones to be sold are the big winners, which is usually your tech stocks, and these are the winners of the winners. So that's what happens. We didn't throw the kitchen sink at it. It was just 100 shares for everybody, just to get a little dollar cost averaging and knowing we're likely to get more opportunities in the future to add more shares and dollar cost average as we cash in profits from protection and as we grow cash in doing so in accounts. So bullish trades now that stocks are above moving averages. So help me out with some bullish trades you guys could think of. Pretty simple, and this is going to be pretty short because I think you guys know most of this stuff. But those of you here, just give me an example of one bullish trade you could look to be doing. Shouldn't say leap. So I gave you a little example there. I added some call options to Micron. They're now above their moving average of the two. And I can look at, see if I can show you both charts at the same time here. Of the two, Micron and Nvidia, what do you feel is the best opportunity? Dave says Micron has come down further. I like that, Dave. That's kind of where I was going. That's where I was going with adding some calls on there. Yes, I did it, a couple days ago. More risk, but you've got all of this room. Man, 157 intraday, 152 high, really. I guess this is 157 high on June 20th. There's still $45, $50 that Micron can come and swing back with. The most likely is that it's going to come up and test this 200-day moving average. But that's still 15, 16 bucks of upside movement. And you've got the advantage of the stock coming back above their 200-day moving average Yes, it needs to hold that today to really confirm that it's broken that. And usually one day doesn't really confirm a trend, but you've also got the stock market in general that is helping everything across the board. And you've got good news that is allaying all the fears that caused this drawdown. So you guys can use your best educated decisions. I'm telling you what I did. You certainly can understand that there's risk at all times. Um, but we've got some good news helping us with the fears that have caused the drawdown, and we have some nice upside that can be taken advantage of either today or maybe more safely tomorrow, assuming we continue to hold these profits above these moving averages. So I asked a question, nobody's answered. Dave gave me a answer to another question. What are some bullish trades? I should say the same up there. Long call options, bull call spreads, stock. If you've been looking for the chance to get into a Micron and Nvidia, here's your pullback to take advantage of. Lee said covered calls. So covered calls require shares of stock and a short call. Is a short call a bullish position? That's for you, Lee. Is a short call a bullish position or a bearish position? Not really, but it can be used when a stock is less bullish. That's true, and you can get some upside profit from your stock, and you can get called away at a profit having your short call up at a higher strike price than where your stock is. All those things are true, and it's a good strategy for certain circumstances. And it's certainly something you could consider here if you wanted to look at, say, getting into shares, having some credit up at for a short call up at 120. You get all that profit from that point up to 120, and you get paid a little credit. Should get some decent credit from that. So if you get called away, the idea would be having a little protection if you're wrong, because short call is a bearish position, right? But you have some distance for it to travel, and on the hope that you can get called away for a profit and keep some credit with it. So that's something you can consider, Lee, and I'm not going to tell you that's a bad idea. You can do that, and that is a decision based on your where your risk tolerance is. But I'm also not going to list it as a bullish trade. It's a conservative um, it is a conservative bearish trade. So it's not full on buying, long puts and you're expecting things to fall, but it is somewhat of a protective position to put on, right? And you can totally consider that for surely. I would like I would look at that more when there's a period you've seen a couple tops. Let's see. We've done Verizon. You've seen something that goes sideways a lot, and you know that there's a somewhat of a top in a swinging back and forth range where you could, if you're looking at Verizon, add a short call up at 42 to get some credit, knowing that it's probably going to be closed for a profit, that credit portion, and that your stock is likely to just kind of swing in this range between 39 and 42. And you just keep rolling those out. But that is also a sideways moving trade, right? You're trying to profit for a stock staying within a range, not wanting to get called away. But suffice to say, our bullish moving options of option trades and stock trades are going to be these three basic ones, right? Long call, I'll even throw in leap long call. Is usually out 6 months to a year in expiration, long-term call options that we often call stock replacement because it's much cheaper than buying the stock, has similar movement. Um, Less risky in the terms of you're paying less money at risk, putting less money at risk. You have bull call spreads where you have a bullish option and a bearish option together. Bull call is going to give you upside opportunity with a little bit of protection where your short call is going to pay for some of the cost of your long call. You're still going to be It's still going to be more of a bullish trade than something like a covered call where um, you still have lots of money in the trade. You have 100 shares of stock at least and looking to get called away or looking for it to go sideways. A bull call, yes, it it can work pretty good if it goes sideways because that takes out some of the that gives you some of the profit on the short call side, but you really need it to also go up because you only have so much time in that trade and it needs to stay above or continue above a certain strike price in your long call option side of that spread. So, and then obviously you have stock, which is something you're considering on a micron or NVIDIA or whatever it is that you are seeing a good drawdown from this last drawdown that you can take advantage of. Apple, not as much opportunity, right? Baidu, some good opportunity, but it has other problems related to China that don't really coincide with, you know, the situation where we're looking at with Micron, where it's had a lot of good market favor in a good moment as a company, getting money from our government to invest in them. And really, it just was sold off because has been doing so good and people were taking profits out of fear. That's not exactly the situation with Baidu, is it? Boeing, there might be some profit, but Boeing is still trying to transition out of really bad business decisions and manufacturing issues. And the upside is not as good as something like a Micron. Meta basically have missed that opportunity if there was one. And that was decent. I mean, this doesn't look as big as Micron, but you got to remember our prices here, pretty significant differences. Got all the way down to what, 450, and it's gone up almost $100, like 80, right? So maybe missed that opportunity. But a lot of you know we have leap long bull call options on Meta after we took a great profit on shares. So Under Armour on more of a breakout on doing better business wise, having some more uh, some good earnings. So that would be a different bet. Disney, more business problems that they still aren't really getting any credit for the good decisions and good things they've got going. So that's kind of why I'm looking more at NVIDIA, Micron. If you've got something you've been looking at in a similar situation, I'd say look at that as well. But those are the two I'm suggesting. And that's really all I wanted to go over to today, guys. You've got some opportunities to look at, and certainly there's still some risk, but much less risk in a bullish trade right now than there was a couple weeks ago, right? Much less. I'll let you know kind of some things I did for myself, what we did for clients, adding more shares. We're at a better spot coming over resistance levels on our moving averages, and the probabilities are even more in your favor now to catch some of the wave back up. All right, guys, that's all I had for you. Any last minute questions I can answer? All right, guys. Thanks a lot. Thanks, Dave. Thanks, Lee, for your comments. Appreciate the time this morning. Have a good day. Have a good weekend coming up, and we'll see you guys next time. Take care.